Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight, the Reserve Bank of Australia Governor Phil Lowe commented on his Beijing counterparties over the effects to the internationalisation of the yuan, but noted that the recent tightening of his capital borders in his speech delivered last night. He was speaking at the event on the globalisation and didn't comment on the Australian monetary policy or the economic outlook. However, the Aussie did find a bit of a negative tone from that, and as you can see, the market has now nearly achieved its target that I was looking for at 74.25 after printing a low of 39, which is a near 5-month low. In light of the current pan, we could see further weakness. Now on the day, I'm looking towards any advances of to 95 to potentially find supply to return from there, and now taking out 74.25 in the next 24 hours or into the start of next week, could see a move towards 73.60-70 before the likelihood of a reversal that we saw back here in December. So for those trading short, you could either take your position back at 74.25 or wait till the market gets to the region of 73.60. Overnight, the European Central Bank rate decision was left unchanged as the benchmark interest rate remained pegged at a flat 0.0. Following the press conference, though, Mario Draghi's statement still held to a dovish stance. So therefore, you can see here the market is clearly backed away from this 109.50-55. Now, also to note, there is bullish divergence returning in the US dollar. If that fully transpires, then we could see the market fall back, closing this gap that was recorded at the start of the week from the French election, and look back towards 108.15 and reassess from there, as we could be looking lower towards 107.60. The dollar-yen story, well, since the rejection from that high 111, still maintains in a negative bias. However, that being said, I still expect to see the bulls return from the 110.50 level and possibly see a recovery back towards 11.50 to 111.95.05. A break above there would give scope up towards 113. It is unlikely to see the support at 110.50 taken out, but if so, then we could see a fall back towards the region coming in at 108.70. Well, the sterling did rally hard overnight, but not enough to take out the resistance around 129.15. Although the 05 level was challenged, it clearly wasn't defeated. The reason behind the rally was on the back of the CBI realisation sales, which climbed to a whopping 38 points, wiping out the estimate 6-point forecast, and previously was at 9 points. So from the strong number is good news for the consumer front. And as you can see here, the market is still not backing away from this top side at the moment. If we see a clear break above 129.15, then this will give scope up towards 130 to 130.60. Support on the day comes in at 128.40, and then if broken beneath there, would look back towards this region around 125 to 126. Technically, gold is still weak, and as you can see here, the market is still looking towards that target of 1,254. Initially, any advances should find resistance at 68, but firmer above at 72. And to wrap up with silver, the market takes the challenge lower to $17.3045, which was crushed, and now exposes the next target, which comes in around $16.80 region. There is still room, as you can see from this downtrend, to get towards that level. But if you are short, you may wouldn't take a little bit of your short position back, just in case we do get an impulse up towards this challenge area around $17.50, with a cap now seen around $17.70. So that wraps up my daily video. Thank you very much for joining me. I hope you have a great day and a great weekend that's ahead.